Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we dive in, standard disclaimer, none of this is investing advice. Do your own due diligence. And today we have a returning guest. This is the very first guest I ever interviewed, so very honored to have him back on the show. Jack Gamble from Nobody Special Finance. Welcome back.
Thanks, Jesse. It's great to be back. Congratulations on the growth of your channel. It's been great to watch, and thank you for having me back on again.
Awesome. Excited to have you back. And I want to talk to you specifically about agriculture today. But before we really dive into the specifics, I'd like to get your broad overview of the agriculture space at the moment. What are you seeing out there in agricultural commodities that make you bullish or bearish on the sector?
So, the ag space, we had a big run up in agriculture commodities that kind of saw its peak in the aftermath of the invasion of Ukraine. And then sometime around late April, early May, we ran into what we usually see is a little bit of seasonality in commodities, and now prices have come down, but they're starting to come down pretty hard. And there's a mix of bullish and bearish uh, influences right now in the commodity space. Starting with the bearish ones, the topics that would send prices lower. We're finally starting to see some grain moving out of Ukraine, moving out of the Black Sea. A couple of weeks ago, we had the first ship docked into Ukraine and left with some grain. I believe it was bound for Lebanon. And then a few more ships have come today. There's 5 more ships are due into this Ukrainian port. So far, it looks like this deal brokered by the UN between the Russians and the Ukrainians to get that grain moving is starting to happen. So that's very bearish for prices because there was I think a lot of that material was written off when the invasion happened. We've also got a global recession that it looks like we're heading into. Um, you know, Regardless of definitions, the economy is slowing globally right now. And there is a belief that I think personally is misguided that grain demand is somehow lessened during a recession. Personally, I think food demand is inelastic. Just because we're poorer does not mean we eat less, right? You have certain caloric requirements that don't go away just because the economy is slowing, just because GDP contracted. Now, certain agricultural commodities are also used in industrial applications like ethanol and things like that. So there could be, to a lesser extent, some influence of a global recession on commodity prices. But I think that's a little bit overblown right now. I think the market is overreacting to that. You've also got this pretty well-coordinated global attack on livestock farming right now, which I think we'll probably get into a little later. That would be bearish for grain prices in particular. The global crop yields have not been as bad as we've been afraid of this year. With weather patterns were favorable, so that helped a little bit. And the strong dollar, believe it or not, even though we're dealing with this global inflation problem right now, the DXY or the Dixie, which is the strength of the dollar as measured against other global currencies like the euro, the Canadian loonie, the Dixie is actually up right now. The dollar is stronger than other global currencies, even though all currencies are falling. Well, most food commodities are traded in US dollars. So the strong dollar has had downward pressure on those commodity prices. So there's a lot of bearish influences in the commodity sector right now for agriculture. Now, bullish, there's one really big one that's bullish for food commodities, and that's energy. When you think about it, food is energy, right? It's the energy we need for our bodies. Food is a derivative of energy. You need fuel for farm equipment. You need fuel to transport the commodities. You need fertilizer to grow the food, and fertilizer is made using natural gas, using a lot of electricity. So energy is the big bullish one, and I think we're probably headed for quite a price shock in energy markets in the coming months. And I don't think the market is really accurately discounting that right now.
You called it in our last interview. You mentioned that you thought that there was going to be social unrest around the world due to food shortages leading to prices that were just way too high for a lot of the people in these poorer countries. We've seen riots break out now in Sri Lanka, Peru, Sierra Leone now, and it's happening in more places as well. Is this just the tip of the iceberg, or is there a way to solve this situation in the near term?
You know, I got some calls right this year. I got some calls wrong. I wouldn't have minded being wrong about this one. I take no joy in have being right about this because I was really afraid of this last fall when I first started to see the energy markets and the fertilizer markets doing what they did. And unfortunately for people, it's as always, it's the poorest populations that suffer the most. I remember when the invasion started in Ukraine, I said most of the casualties from this war are not going to be in Eastern Europe. They're going to be in Africa. They're going to be in the Middle East, Southeast Asia. And the casualties have not started happening yet, but we're already seeing the early innings of that. Sri Lanka is a perfect example. Unfortunately, I don't see any short-term way out of this. Obviously, the grain moving out of the Black Sea is a step in the right direction. But take Sri Lanka, for example. Sri Lanka is a case study in how to destroy an economy, right? In 2021, the Sri Lankan government had the bright idea that they were going to take the whole country organic farming by force. They banned all chemical fertilizers. And wouldn't you know it, crop yields were roughly cut in half in 1 year. I mean, talk about a case study in the destruction of an economy. In 1 year, because of this misguided ESG movement to make the whole country organic farming. And hey, Sri Lanka had the highest ESG score of any country in the world, according to BlackRock. Well, the problem is that cuts your yields. Now, there's a unique problem in the developing world that we don't have here in the States. We're kind of spoiled here in the US because when we need food, we take our dollars and we go buy food. Pretty easy, right, for us. Kind of like the same way Americans are not very good when it comes to other languages because we're just used to our one English language environment and our one currency environment. And everybody else is just expected to use our currency and speak our language. In Sri Lanka, when you need to buy food as a country, it's not so easy. First, you need to go buy dollars and then you can buy food. Well, Sri Lanka can't print their own dollars. They don't have a Federal Reserve like we do. So when they needed dollars, they would have to export something. And Sri Lanka is one of their biggest exports was tea, which is grown in their farms. Well, when they went chemical fertilizer free, their tea exports were cut in half. So there goes their source of dollars, right? They lost half of their source of dollars. At the same time, the dollar cost of the food that they needed to import went up because the DXY, because the price of the commodities went up. Well, when they need to trade their Sri Lanka, I believe it's the rupee is the currency in Sri Lanka. When you go to trade that for dollars, the DXY, the dollar value has gone up relative to other currencies. So now you need even more rupees to buy your dollars. You need to buy more of the dollars to import food because the price has gone up. And you need to import even more food because of your silly fertilizer ban. You're growing less food. So Sri Lanka has just had this perfect storm of economic and agricultural destruction. And unfortunately, the people in that country are going to pay the price for it. And it looks like their fate is sealed because, there's two possible outcomes here. You've got starvation or some kind of bailout for the country. And the usual mechanism for a bailout is the IMF, the International Monetary Fund. The International Monetary Fund usually demands some kind of strict austerity from any country receiving a bailout, which usually means the existing debtors in that country take a haircut on what they're owed. Certain policies need to be enacted to reduce government spending, right? They expect a pledge of some kind of austerity. Well, one of the biggest debtors of the Sri Lankan government is China through their Belt and Road Initiative. China built these big extravagant ports, and I think they call it the world's biggest empty airport or something like this huge airport that nobody flies through. It was built as part of this Belt and Road Initiative, and now Sri Lanka owes China all this money. China is refusing to take any haircut on what it's owed. And because of that, the IMF is saying, we're not going to bail out Sri Lanka. And unfortunately, caught in between is the people of Sri Lanka who have nothing to eat, have no fuel, their economy's frozen in place. So I don't see any easy way out for those people, sadly.
We're also now seeing mass farmer protests happening, particularly in the Netherlands, but that's now spilling over into Spain, Italy, France, India. Policies are being implemented potentially in Canada, where I'm from, that could lead to similar protests as well. So, for those unaware, could you walk us through why all these farmers are protesting, and will this exacerbate the food crisis moving forward?
So this is where I want to tiptoe around the subject a little bit, Jesse, because I get myself in trouble when I talk about this topic a lot, and I don't want to get your channel in trouble. But suffice it to say, there is a very well-funded, well-organized effort to get you and I to eat bugs right now. And I'm not kidding. This is not a conspiracy theory. This is happening in broad daylight publicly. They freely admit to it. They're not trying to hide it. They're actually hiring actors to promote it. All right. It's being the source of this information is an organization that I'll call the FEW backwards. That way, maybe I don't get your channel in trouble by talking about this. And unfortunately, I get my channel in trouble all the time when I talk about this. Um, and it stems from climate change initiatives. The belief is that livestock farming, in particular cattle, is very resource intensive. It generates a lot of greenhouse gases, a lot of other pollution like nitrogen, ammonia, nitrous oxide. And it also consumes a lot of food, a lot of grains, right? About 40% of all corn, wheat, soybeans grown in the world goes to feed livestock. So the belief of this global organization that includes some of the most powerful people in the world is that we need to grow less livestock in order to solve climate change, in order to solve global hunger, in order to solve food crisis, inflation. And well, they don't want to give up their steak. They want you to give up your steak, right? They want just enough cows to be grown so that they don't have to make any change to their cost, to their standard of living. They can afford it. It's everybody else that has to eat bugs. And to do that, you have to get rid of the livestock farmers. So the European Union, which tends to act at the behest of this organization, the European Union has an initiative to cut nitrogen and ammonia pollution by 50% by 2030. And the only way to do that is by growing less livestock. And the biggest target that is ripe for this organization is the livestock farmers in the Netherlands, because there's some of the most productive cattle farms in the world are in the Netherlands. They grow the most cattle in the smallest amount of land of anybody pretty much in the world, which also means it's one of the highest concentrations of resources and one of the highest sources, or at least most dense sources of this pollution that they're trying to target. And basically the European Union, this FEW backwards organization, and the Dutch government is trying to put those farmers out of business. And well, they don't want to be put out of business. They don't want to have their livelihoods destroyed. And so they're saying, if you're going to destroy our lives, then we're going to make yours, a living H. So they've taken their tractors to the capital. They've blockaded roads. They've blockaded food distribution centers and say, hey, no farmers? Guess what? No food. So you've got empty supermarket shelves. I mean, some of it has been borderline hilarious, like spraying manure into the front yard of certain government ministers, bordering on vandalism, but you can't help but appreciate the irony in the situation, I guess. I tend to be more in the libertarian and small government type, so I can laugh when I see this. I don't think the globalists think it's very funny. But as shows of solidarity, you're also seeing farmers in Germany, farmers in Spain, and other countries are latching onto this issue because they know they're not going to stop in the Netherlands. They know they're next. And you mentioned Canada. Justin Trudeau and his government are trying to force a mandatory 30% reduction in fertilizer. Now they're denying that. They're saying, no, what we're trying to force is a mandatory 30% reduction in this ammonia and nitrogen pollution. But they know the only way to achieve that is a 30% reduction in fertilizer usage. And I have to caution you, let's go back to Sri Lanka. Where did all that mess in Sri Lanka start? It started with a misguided ban on the use of chemical fertilizers. Say what you want about nutrition and organic food and everything. It sounds great. But the fact is there's 7 billion of us in this world right now. And the most resource efficient way to grow food is the use of chemical fertilizers. And until something better comes along, you can't just ban that and expect the food to still be there next year.
So I'd like to get a little bit into the food plants that have been burning down, some people say mysteriously in the US, and the whole conspiracy surrounding that. A lot of people claim it's being done on purpose to inflict an artificial food shortage. Of course, you have outlets like Reuters fact checking and claiming there's nothing to see here. What's your view on this situation? Is this just a conspiracy, or could there be something darker behind it?
So you have to be careful with the term conspiracy theory now, right? Because it's 2022. This decade, like if we had a big scoreboard right now, and on one side was the conspiracy theorists, and on the other side was the fact checkers, pretty sure the conspiracy theorists are winning in the 2020s right now. It's a tie at best, and that's being very polite to the fact checkers. All right. Now that being said, I don't personally subscribe to this particular theory. All right. I have seen the stories, and there are a lot of them, but I think they're getting more attention than they typically do because we're in a heightened food insecurity situation this year. I'm a volunteer firefighter in a rural area in Southeast Pennsylvania, and grain dust explosions are actually pretty common. I don't know if most people don't realize this, but food processing facilities, they tend to be a lot of dry material and a lot of food. And well, food is fuel, right? If you want to be grossly simple, food is really not that different chemically from gasoline or oil, right? You have a certain combination of hydrogen and carbon, and hydrocarbons are flammable in high enough concentrations and in a confined space, they become explosives. And grain dust is known to blow up. If you get a big poof cloud of grain dust, and then you have an ignition source and you have a confined space like you tend to have in these big grain storage facilities or in food processing plants, the place will just go up. And it happens a lot. And I think there's a heightened sensitivity and more press attention on it now because, to an extent, the conspiracy theories, which again, let's be honest, it's 2020s, and these theories, you know, call these people nuts at your peril because it's like daring them to be right this decade. But in this particular case, I don't really see this global effort to destroy the food plants, at least not via these accidents at the food plants. I do buy into some of the other theories, like they want us to eat bugs and they want to put farmers out of business. Yes. And let's be honest, if your goal, like if you were Team Thanos and you wanted to snap your fingers and get rid of half the population, a lot of what they're doing, starting wars, creating runaway inflation, causing food shortages, well, that's an easy way to get, it's a lot easier than gathering the Infinity Stones. Let's put it that way. So, but the food processing plants, I don't really think that's part of it.
Natural gas continues to break price records, particularly in Europe, but prices are rising in the US as well. How do you see this affecting fertilizer production? And as a result of this, is now the time to maybe be looking at fertilizer-based stocks like potash companies, or even natural gas stocks themselves? Or are we close to a peak in terms of prices right now?
I'm constantly watching the fertilizer stocks and the natural gas stocks, and they've started to rally already. The last month or so, as part of this bear market rally that we've been in, the fertilizer and the gas stocks are rallying particularly hard. That said, I still haven't started any personal positions in those. Although fertilizer, I'm probably pretty close. Let's be honest, Europe will not be making fertilizer this winter. All right. If they struggled to make it last winter, it's going to get even worse this year. Right. The flow through Nord Stream 1 is at 20% of capacity right now. Last winter, when the price of fertilizer ran away, net flow through Nord Stream 1 was at 100%. So, Europe has done a pretty good job this summer of getting their tanks filled with natural gas storage for the winter. They're actually right about where they need to be for this time of year. They'll say they're just slightly above the 5-year average. They're paying out the wazoo for it. I mean, the base load power prices and the natural gas prices, if you look at Dutch TTF natural gas futures, I mean, they're up 400-500% from a year ago. But the storage levels are coming up. However, when you're comparing storage levels to a year ago, you have to keep in mind a year ago, you had 100% flow through those big pipelines. You don't have that now. So that storage is not going to last as long. So there are going to be some really severe energy austerity measures inflicted on the European population this winter, and they're already gearing up for it. You're already seeing zinc smelters are shutting down, aluminum smelters are shutting down in Germany. The fertilizer plants, a lot of them have already been shut down. They've announced plans to shut them down further. So the fertilizer story, that's coming back, and it's going to come back big time, especially if we have a cold winter. Europe was partially bailed out by Mother Nature last winter. They had a very mild winter. If we have a cold one, it's going to be even worse. So that's the story over in Europe. So, fertilizer prices have come down off their highs as they seasonally do. We're still where we were at late last year in fertilizer prices, which were historically very high. And I think we're going to see that curve turn upward again very soon and rocket to all new all-time highs. And that's going to bring food prices higher. Now, here in the States, it's a little different. Like, we have all the gas in the world here in the States. We just have it in the wrong place, right? They need it in Europe. The only way to get it to Europe is to liquefy it, put it onto ships, and send it over there. Now, there's this sleeping giant, if you will, in U.S. natural gas markets right now called NESHAP, National Emissions Standards for Hazardous Airborne Pollutants. It's the EPA rules governing certain cancer-causing chemicals. And there was this rule put in place back in 2003, 2004 for formaldehyde involving these stationary natural gas turbines. And they put this rule in place. It was challenged in court, and they put a stay of enforcement on the rule. They never got rid of the rule. They just said, we're not going to enforce it for 18 years. And then in February of this year, the EPA said, we're eliminating the stay. So you have until September 5th of this year to come into compliance with these rules. And there's 250 natural gas facilities in the United States that use these turbines, namely the Sabine Pass, Corpus Christi, and Cameron liquefied natural gas plants. 65% of U.S. natural gas exports involve facilities that use these turbines that have until September 5th to demonstrate compliance with these rules that have always been there, but they've never been enforced. And Sabine Pass and Corpus Christi have officially asked the EPA for an exemption. The EPA has not granted that exemption. Cheniere Energy, that owns these plants, has made no, at least public efforts to come into compliance. Nobody's really talking about this. These rules, they have until the 5th. September 5th is only about 3 weeks away right now. So barring some kind of action from the EPA, or maybe they just decide, we're not really going to enforce it, or maybe the penalties are going to be a slap on the wrist, minor cost of doing business. But if the EPA decides to crack down, we could see a massive shutdown in U.S. natural gas infrastructure here very soon. And because of that, I've been hesitant to get into the natural gas space. There's very little attention on this topic in the media. There's some articles out there, but not very much. And it's really up to the mood of environmental regulators whether these facilities continue to operate. And I'm not willing to put my money up against the mood swings of environmental regulators. I don't think that's a very good bet. And this also applies to power plants, namely in the Southeast U.S. There's a lot of power plants that use these stationary turbines. And also a lot of the natural gas pipelines here in the States use these turbines. Now, the power plants and the LNG facilities, that has to do with natural gas demand. But if they shut down the pipelines, that would affect natural gas supply. So really, in my opinion, the U.S. natural gas space is uninvestable right now until we get some clarity from the EPA and from these organizations on what the heck is going on with these formaldehyde rules that have been on the books since 2004 that they just decided in February, you know what, we're going to start enforcing them, and you have until September to come into compliance. It's a real mess. And we still don't know. I guess we'll find out on September 6th if the EPA is going to crack down or not. So it's a pretty big variable.
So you mentioned last time that you were on that you mainly play the agricultural space through ETFs. For me personally, I use the cow ETF on the TSX, holds a basket of companies involved in various aspects of agriculture, from potash, farm equipment, packaged foods, etc. Is that similar to the kind of ETFs you invest in? And could you give us some ETF names that may be worth looking into for those interested in this space?
So the cow ETF that you mentioned, that's a little different than the ones I use. The cow ETF holds mainly companies. They're pretty diversified companies. You've got suppliers, you've got some consumer staples. I think John Deere was in there, right? So that's a little bit of an industrial name. So those will move up and down with the S&P 500 to a certain extent. They could be affected by things like metal prices, industrial output, trade embargoes. The ETFs in particular that I've been watching this year have been two ETFs, ticker symbol CORN and ticker symbol WEAT. I do still have some positions in both of those, but it's significantly reduced right now because the hit that the markets have taken since about May timeframe. But those did very well through the fall and through the spring this year. I was taking profits along the way, so I didn't get absolutely crushed when the markets turned. That being said, it's not nearly as well performing now as it was. But those ETFs, they're run by an organization called Tucrium. They invest in commodity futures. So it's a derivative of a derivative. If that makes sense. So the ETF actually holds commodities, the futures in corn or the futures in wheat. They hold a different number of maturities. Right now they probably have like December futures and then May next year and then December 2023 futures. So they're invested in the commodity itself, whereas the cow ETF is invested in companies whose profitability is determined to an extent by the performance of those commodities. So the prices will tend to track a little bit, maybe subtle differences along the way. I think either one is a solid play if you're trying to get exposure in the commodity space. Just it's important to understand the differences between the two.
Absolutely. And I want to touch as we sit right here talking about potentially profiting from a food shortage. You're going to have people out there who say, "Oh, you're just trying to take advantage of a bad situation." Obviously, I think this viewpoint's completely misguided because investments actually needed to solve the situation, similar to what's happening with the energy crisis. How would you respond to someone who says making money through investing in agriculture is immoral, it's wrong because there's people starving all around the world?
Well, I would say probably the worst thing you could ever do is starve a family, right? And I don't think it's people who are investing in the commodity space right now who are starving families. Actually, I think it's the ESG people who are starving families right now. The people who are criticizing the investors in the commodity space, right? The people who went over to Sri Lanka and convinced the president, hey, it's a great idea to ban chemical fertilizers because it played really well in the drum circle at my liberal arts college, right? Let's not consult the farmers. Let's just go ahead and do that. And the next thing you know, crop yields are down 50%. The economy of the whole country is destroyed. People's lives have become a living hell. They're on the brink of starvation. It's not commodity investors that caused that. It's the ESG people who caused that. So a little bit of self-awareness, I think, goes a long way in that situation. Now, the other point I would make is that what's happening with the food shortages, the only way we're going to get out of this is by more supply coming online. All right. I honestly, I talked about the Team Thanos idea before, right? And I use that hashtag half joking on my channel a lot. They're going after the demand side of food. They're trying to reduce food demand, which is borderline evil, if you ask me, what they're trying to do, because reducing demand means fewer mouths to feed. How do you get fewer mouths to feed? People die. But the alternative is more supply. And the only way you get more supply is higher prices. Unfortunately, the solution to shortages is higher prices. This is an economic reality. It's not greed, right? When prices go up, you incentivize more production and you incentivize investments in future production. So that's why I think the solution to shortages is higher prices. It's basic economics. Now, a lot of people, again, a lot of the ESG types, the people who have caused this mess through their reckless fertilizer policies, are now advocating for things like price caps, price controls on not just energy, but food. Well, unfortunately, price controls, another way to say price controls or price caps is government mandated shortages. Because when you don't allow prices to rise, you cut off that investment in future supply. You're no longer incentivizing. Farmers are not going to work harder to produce more food that won't make them any more money. So you're mandating future shortages when you institute price controls. So that will make it even worse, unfortunately. And there is no pain-free way out of this situation. There just isn't. The time to worry about this was years ago when we decided to cut off investments in the oil and gas space that caused these higher energy prices, that caused the fertilizer shortage. And the time to worry about this was before we printed trillions of dollars that caused this runaway inflation that's creating the currency exchange nightmare that's complicating things. So, it's not the commodity investors that set in motion this reckless energy policy, the reckless fertilizer policy, the grotesquely negligent monetary and fiscal policies. We're just trying to deal with it right now. So again, I think the people who are accusing commodity investors of being the problem probably need to spend a little bit more time looking in the mirror than casting blame.
Completely agree with you there. And I want to touch now on how important it is for individuals to secure their own food supply, like right now and in the years ahead. I unfortunately don't have any land I can grow food on, but I do make sure to keep a few months worth of non-perishable food items on hand in case we get a food shortage where I'm at in Croatia, and the grocery store shelves end up empty. So, what's your recommendation to the average person out there in regards for preparing for this kind of worst case scenario?
So it's time to stop looking at the doomsday preppers like they're nuts. Okay. Because let's face facts, folks, it's the 2020s. And, they were nutty. They were fun to make fun of when they were on the Discovery Channel or Nat Geo or whatever. But let's be honest, they have been at least partially right about a whole lot of stuff. All right. So at this point right now, I'm noticing a lot of overlap, especially on YouTube, between the financial space and the prepper space. The line between the two is blurring. And there's a reason for that, because preparing for a food shortage has become a prudent financial decision. It's no longer the subject of conspiracy nuts. It's now a good financial decision. And if you don't want to say you're a doomsday prepper, or you don't want to use the word prepper because you don't like the social connotations, consider it a good hedge. All right. It's hedging against future price hikes in food, which I'm pretty sure are coming. They're already here. So, my personal opinion is it's a good financial decision, and I hedge by buying things that I eat anyway for future consumption. You got to pay attention to shelf life. In particular, my wife comes from Puerto Rico, and when my mother-in-law comes and visits for about half of the year, she's at my house, and she's a fantastic cook. She makes the most delicious Puerto Rican beans and rice. I absolutely love it. So every time I go shopping, I buy an extra 20-pound bag of rice, and I buy a couple of bags of dried beans, and I store them in Mylar bags inside food grade buckets. The shelf life of that material, if stored properly, is up to 25 years. Now, I'm not spending any extra money because I'm going to eat that anyway. I've just pulled forward my food cost. I've paid in today's dollars for tomorrow's food. That's called hedging. All right. It's a long commodities position. Right. It just happens to be, it's stored in a cool, dry place in my basement, but it's a good financial decision. My food bill will be lower next year or the year after that and it's also an insurance policy that I'm getting against an actual food shortage. So, get over those social connotations, the negativity. Don't worry about being made fun of by your friends, because if there is a widespread food shortage next year, your friends are not going to feed you. So they're going to be banging on your door for what you have. So, I just think it's a good financial decision. Pay attention to shelf life, right? Don't go out and overspend. Don't stockpile boxes of MREs or some of these gimmicky, expensive, commercial prepper foods. The stuff is overpriced. I think there's much cheaper ways to do it. Spend a little bit of time, watch some of these prepper channels, because these guys, they've scienced this out. They know what they're doing. They've practiced it for years. So you can learn a lot there.
Awesome advice. And aside from the agricultural space, I wanted to ask you if there's any other commodities right now on your radar, maybe oil and gas. You mentioned natural gas in the US already, uranium, precious metals. Is there anything that's catching your eye that you think presents an opportunity right now?
Well, I always have a soft spot for precious metals. So that's always been one of my bigger positions. So, that's a given. I like gold. I like silver. I like that hedge against future monetary debasement. Although I think probably in the short term, you probably have a little more pain ahead in the precious metal space. In the long term, I think that's a winning bet easily. But the biggest one I'm watching right now is setting up for this fall, this winter, I think, is energy. Right now, one of the reasons why we have this big rally in stocks and why inflation numbers have come down is because a lot of people don't know this. The United States is dumping 1 million barrels of oil a day on the open market. We have these giant underground salt caverns called the Strategic Petroleum Reserve. We built them in the 80s in response to the OPEC oil embargo of the 1970s, which caused the last big inflation problem we had. And there are hundreds of millions of barrels of oil in these giant underground salt caverns. And we have been dumping that on the open market to suppress oil prices. We started in May, which is when oil prices really peaked. They've been coming down ever since, 1 million barrels a day. And right now we're scheduled to do that at least until October 21st, which is conveniently only a few days before the midterm elections. A lot of people have been crying foul, saying this is political gamesmanship. Well, when we stop dumping that 1 million barrels a day, the supply of oil goes down and the demand stays the same. And by dumping this oil on the open market, we've suppressed prices. So we have disincentivized investment in future production by suppressing prices with artificial supply, right? We're going to have to refill the Strategic Petroleum Reserve, and we're almost out. We've used about half of that oil right now. The Strategic Petroleum Reserve is made up of a mix of light sweet crude and medium sour crude. Without getting too chemical, our refineries that make gasoline use medium sour crude, and we've already burned through about half of the medium sour that we had in the Strategic Petroleum Reserve. So we can't keep this up much longer. We have a couple of months tops of this behavior. And when that happens, I think oil prices are going to come roaring back. And it's going to happen right around the same time it gets cold in Europe. And right now we're starting to see Europe is starting to burn oil for electricity again. They haven't done that in decades. So because they can't get natural gas, they're starting to burn more oil. That's more demand for oil coming at the same time. So I think the oil trade, the energy trade in particular, it's a fake market right now. It's artificially suppressed by this dumping of the Strategic Petroleum Reserve. Now you have some other things going on right now, like severe slowdowns in China that could be happening. China's facing a banking crisis. So a severe economic depression in China could curtail energy demand, or I should say will demand curtail energy demand. I don't know if it would offset the European winter or not. And you've also got the prospects of the Iran nuclear deal coming back, which could bring more supply on the markets. Flip side to that coin is if the Iran nuclear deal falls apart at the last minute, and God forbid we end up in a military conflict in the Strait of Hormuz, well, that would send oil prices skyrocketing instantly if that were to happen. So there's a lot of factors in play there, but right now the sector I'm watching most is energy. Again, I think food is really just a derivative of energy. So the commodity trade, the grain trade really is dependent on oil and gas prices right now.
Well, thank you so much for joining us, Jack. This has been an incredibly educational conversation. Really appreciate it. For viewers who want to hear more from you, where can they find you online?
And you can find my channel at Nobody Special Finance right here on YouTube. I try to post every day. I do pre-recorded videos and I do live streams a couple times a week. You can also follow me on Twitter at JGNuke. And that's about it.
Awesome. Well, I'll put links to both in the description below. And great to have you back on and hope to continue the conversation in the future.
Thanks, Jesse. Thanks for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.